can stocks recover if the jobs market doesn't? Joining us now to talk about that, a veteran market strategist who is named to Institutional Investors All-America Research Team 10 times. Barton Biggs correctly called the technology bubble in the late 1990s and the recession that followed, but he's been a stock market bull for the past 2 years. He was chief global strategist at Morgan Stanley, now runs Traxis Partners hedge funds. And Barton, it's been, I guess, a rough couple of months for you. What do you think about just the continued nasty economic data that comes out? Does it change your bullish tone?
Well, honestly, the economic data has been a little disappointing in the last couple of months, but it's high-frequency data, and you could get a reversal of that pretty quickly. I mean, what bothers me, Matt, and which worries me, is that I'm afraid that the U.S. and the European countries and Japan also are in the process of making a policy error and are tightening fiscal policy, even as the global economy begins to go into this soft patch. And if they do that, the same thing could happen that happened in the 1930s, and when Roosevelt did that in 1937 and plunged both the stock market and the economy down a lot, and that's a cause for concern.
It's funny, Barton, I was just about to ask you about that. We are going to talk to Christina Romer a little bit later, and obviously one of the questions I want to ask her, do they have another stimulus package planned? Because clearly a lot of this data has been negative due to the withdrawal of the stimulus. For example, the $8,000 tax credit that you got for buying for new home buyers. Do you think that the administration needs to put some more stimulus into action?
Well, the administration has tried to, and they tried to get the Senate to renew the extension of unemployment benefits, and the Senate voted it down. So and Obama was the only world leader at the G20 conference last weekend that was arguing that the world should not tighten fiscal policy and be obsessed with reducing the size of the deficits and things and raising taxes. And he was arguing for more stimulus. So it's not the Obama administration's fault.
Barton, let me ask you, though, if all the governments continue to pursue these tightening policies, these austerity policies, and that is how it plays out, I mean, do you think then there's no doubt about that we could be headed for a double dip here?
That's the big question. Yeah, look, I'm worried about it, and I've reduced my risk a lot because of that, and belatedly, I would add. But I'm definitely worried about that, and I'm worried that we could have not just a soft patch, but a double dip, which lasts 2 or 3 quarters, and where nominal GDP is only up 2 or 3%, and that'll have a big effect on profits, and it'll scare everybody, and I'm afraid the market goes down another 10 or 15% if that happens.
Does that go against, though, kind of your fundamental thinking about the corporate outlook? I mean, a lot of folks have come on and said corporate earnings look very good here. I mean, and that the market is very cheap. Does that kind of go, you said you took a lot of risk off, does it go against what you really kind of believe about the market currently?
No, I mean, I believe what I said. I'm uncertain here, and I'm worried, and I think I was shocked that the G20 conference came out as strongly as they did, and I'm shocked that the Senate voted down the extension of the unemployment benefits, and I'm shocked at the amount of power that the Tea Party group seems to have, and so we could make a policy error here and convert a soft patch into a double dip. And this stock market, I mean, people are talking about it and recognize it, but people aren't positioned for it, and I'm afraid it could take us down further.
Hey, Barton, we were talking back in April, and you said you expected to see earnings around or possibly could be as high as $88 or $90 a share. How much lower do you see that now? I mean, because of the last couple of soft months of economic data and because of the policy errors that you see, how much worse do you expect it to look on the corporate front?
Well, second quarter earnings will be very good, which will come out in the next couple of weeks. But I don't think the market's going to care. The market's worrying about the earnings that are to come. And I think the S&P could only earn $70, $75 this year if the second half is truly weak and we have only 1.5–2% real GDP growth, or even less than that. And so, yeah, there could be an earnings disappointment coming up here.
What do you think about 2011? I mean, do we pick it back up there, or does it continue on? I mean, is this a process that needs government stimulus, or we go into a real, say, tailspin here economically?
Look, I guess I'm sort of inherently an optimist. So I can't believe that rational politicians, if there is such a thing, are really going to allow that to happen. And look, the price of oil is coming down. There are some countervailing effects that are going to that could keep us from doing that. And look, this is what always happens at this stage of the cycle. And Ed Hyman put out a piece last week rerunning a section of Time magazine in 1982 at exactly the same stage in the cycle, using exactly the kind of words we're talking about now. The U.S. economy is collapsing, the world's collapsing, it's the worst time since the Great Depression, blah, blah, blah. And that was right at the bottom. So, we got to be flexible and see what happens.
Barton, you mentioned earlier that you've reduced risk. I think investors right now are very nervous, and I think they're curious about what that's meant for you to reduce risk.
What did that mean? And it meant that it was painful. And I don't follow your question.
Well, I guess I'm curious then, does that mean that you put more money into cash, you put more money into bonds? I'm just curious in terms of strategy here.
What are you selling?
No, I sold stocks pretty aggressively in the U.S. and we had a lot in tech, and I've taken basically all of it out in the U.S. And we had a broader exposure to the consumer stocks, and I mean, just in general, I reduced my net long position by about 30 or 40 percentage points.
Barton, just 10 seconds here. Do you still like Asia? Do you still like China?
I do, and I think it's possible that the emerging markets and Asia are going to ride through. But even if the U.S. goes into a mild double dip, that Asia and the emerging markets are going to come through fine.
Barton, 5 seconds by the end of the year. Do you think the S&P will have showed some gains? And you've got to be really quick here.
Yes, I do think so.
Okay.
Is that quick enough?
Yes, it was.
Barton, thank you very much. Have a fantastic 4th of July holiday, if that's possible. Obviously, it's been tough.